Hi, it's Michael. Welcome to the channel where we figure stuff out together because we're all in this together and we certainly need to figure this shit out, the stock market. It's another crazy day. Drama everywhere. Tweets from the president wanting to fire Powell. Stock market dropping 1,000 points. Crazy day. So what I'm trying to do here is break it all down for you real quick, show you a bunch of little segments really quickly throughout the day, save you some time, and get you the point of what's happening. So I'm going to start off really quick. We have a few different videos. We have Jeremy and Meet Kevin, but starting right out with CNBC had a segment today that I thought was really interesting and actually developed into a fight. It is worth watching.
Here's what I'd say. I'd say that foreign investors and domestic investors, including myself, are analyzing this like we would a company. And when we see the CEO...
How do you do that?
Well,
you can't do that.
Well, here's how you can do it. You can do it from the top line. I can take a look at a CEO that I wouldn't hire for any of my companies because he bankrupted 5 others.
I thought that was really interesting that he never mentioned Trump by name, but we kind of knew what he was talking about. That said, the next guest was on to this, and that's where things are about to get really escalated.
He really doesn't know what he's doing by putting those people in positions that are critically important to this country. So when I look at it, I agree with Tony. I've agreed with Tony for a long time. I think I was there before Tony, basically since the inauguration day. You can't invest, and your return is ultimately defined by your point of entry. And I still believe 4,000 to 4,500 is where we go. CEOs are frozen. And there's one more thing, Scott. It's misplaced to think that 25 or 100 basis point cut will matter. That's the difference. I don't see this as an event. I see this as long-term, and events with Brexit, events with financial crisis, events with 2015 when oil went below, cash costs.
So what are you 100% in cash?
I'm almost completely hedged. Yeah.
Because
very little exposure.
But to Amy's point, so you don't believe that a social media post literally could cause a reversal in this market
No, I do.
faster than you can say I'm hedged?
I do, but I don't believe it'll be sustainable because the road is already going towards recession. That's the road I see, and going towards stagflation. You take comments that are so misplaced. Now's the time you want to instill confidence in the Fed. You don't want to call somebody a loser who's running the Fed, who's responsible for economic policy, not just here, but in the world by association.
First off, I love you, Steve, but coming on air and telling everybody we're going to go into a financial crisis, I don't think that's the right message for anyone, especially given the fact that, oh, by the way, the United States of America is still the world's largest GDP. Oh, by the way, we still have the best companies, Steve. And oh, by the way, as I said in my previous comments, when we have a recession, multiples go up. And so looking at average multiples since this, that, and the other thing actually doesn't work. Nor does... Steve, hold on. Let me talk. Let me speak, Steve. Steve, let me speak. If you go back to the last 12 months of earnings, we're right now tracking $200. Are you saying that we're going to see another 20 to 30% downgrade in earnings? I'm telling you that is not going to happen, Steve. It hasn't happened in history, so why would it happen now? And oh, by the way, too, I think you're probably, just me saying, you're probably letting your political views and your personal views cloud what's happening in terms of what you're doing in investing. If I was an investor, which I am, I'm going to be adding to stocks now because I want to be in the market for the next 2 years. And I think 2 years from now, the market is significantly higher.
So like I said on the last video, when the market's going well, everybody it's fish in the barrel. Everyone's got a winner. Now it's really separated. There are people who think the market's going to go up and the people who think the market's going to go down, and there's no middle ground here. Let's look at Jeremy, who is also positive that this is a buying opportunity.
Now we have Trump taking things to a whole new level in regards to the fight against Jerome Powell. He called Powell a major loser today, and then warned the U.S. economy could slow down unless interest rates fall immediately. Right now, I told you guys months ago there's going to be a big fight between Jerome Powell and Trump, and it's certainly right in front of us. I mean, this is a huge escalation in regards to this fight. Calling him a major loser, that's downright disrespectful, right? We've had 8 straight weeks, basically 2 months of disastrous sentiment. Complete dumpster fire. We've never seen it this bad ever. In terms of an 8-week span. I've gone through the entire sentiment survey, all the way through the 2022 crash, the 2020 crash in Rona, the 2008 crash, the tech bubble crash, go back to the 90s, go back to the 80s. You'll never see an 8-week period this bearish. This is unprecedented. And here we are at this moment where over this next 13 days, we could actually start to flip a little more bullish.
Agree or disagree, this next segment that Jeremy talks about being proactive instead of reactive is pretty interesting.
Right. And so if there's a great opportunity, you want to buy it before earnings, right? If you see a great opportunity in the market, right? If you're a long-term investor, that is. A trader, that's going to be a totally different story. You're trying to get in and out of stocks and play it from, trying to make $1 in the stock here, $1. No. If you're a long-term investor and you see a great opportunity, you buy that stock before earnings. So for instance, AMD, right? I'm more scared of AMD going to $100 plus after earnings, right? Than it going to $70 after earnings. If it goes to $70 after earnings, perfectly fine. I'll be more than a happy camper to buy more shares, right? But I'm much more scared of not buying AMD before the earnings come out. Earnings are good, guidance is good, conference call is good. The stock ends up going to $100, $105, $110, and I'm sitting there like, great. Like, why was I not buying more shares? And then I'm in a situation where I'm hoping it goes back down. I'm like, oh, please go back down to $90, please go back down to $80, right? Other people are scared of going down on stocks. I'm scared of missing the money on the upside, right? I'm playing the game on offense. My defense is always owning value stocks and dividend stocks in my portfolio as well, and never risking the farm on one stock, right? That's my defense. But overall, I'm playing an offensive game here. I'm here to make money. I'm not here to preserve capital. If I was here to preserve capital, the only thing I would do is I just keep my money in a savings account all the time, right? And be broke forever. Like, that's what I would be doing. You're not going to make any big money being in a savings account your whole life. I can tell you that much, unless you have some crazy income or something like that, right? You want to get to the big dog money? You got to play offense, right?
Interesting. All right. Well, just like the market goes up and down and swings side to side, so do these guys. We had the first two disagreeing. Now we have Jeremy saying bye. And now we have Kevin with his point of view.
But here's just another example of at least some of the Chinese talk that is going on. Chinese embassy in the U.S. reposts this post here, where an individual says, "We will continue to open rather than close our doors, tear down rather than erect barriers, empower the world rather than focus solely on self-interest, and bring more stability and certainty to the world with our high-quality development and high standards opening up." So in other words, China say, please, and we've talked about this for weeks, but China's basically doing the, spread the legs, basically going, come to me, baby. Whereas the United States is like, no. We want certain requirements. All right, what kind of requirements do you want? Well, I haven't figured it out yet. Give me everything. and that's probably why we just haven't actually seen deals announced yet. So there's this talk that Donald Trump is going to make all these deals, but we're not seeing them yet. Instead, we're seeing the opposite. And this is why the Wall Street Journal is now reporting that these tariffs and this tariff warfare is sort of like a new Cold War. That really, one of the reasons we didn't have a Cold War with China previously is because we had trade. This is basically the democratic peace theory at work. The more we trade, the less we fight, the less we war. And so there's this idea that trade was the glue that kept China and the United States together. But today, it's becoming harder to argue that we're not in a new Cold War. What we now face is a shock situation in the bond market, which is probably driven by people basically buying shorter term bonds, not having the trust in the longer term bonds. So the longer end of the curve is getting sold off, anti-American. The shorter term gets bought as a nearer term hedge. Now we're shock prone. And the question is, what happens? Like, where's the credit event? Is it a BNPL credit shock? Is it a leveraged buyout shock where all of a sudden businesses can't get access to credit anymore? We don't know what it's going to be. This is sort of that black swan moment. But what we do know is that this drama with China getting worse, not better, increases the odds on a daily basis that we are going to experience some form of incredible shock. And yet, so far, we have not seen retail capitulation in the stock market. So far, most people have been buying the dip, at least in the retail community. It's mostly just been hedge funds that have been selling. So the question is, should we keep buying the dip? Or do we wait for a shock and the Jerome Powell Federal Reserve 180 and complete bailout of markets? Right now, my preference is to wait, but everybody's got their own POV. I like waiting for when the Fed is panicking, because that's usually when everyone is panicking, and that's when I like to buy. That said, let's see what happens. Thank you.
Yeah, let's see what happens. Tomorrow will bring another day. I think Kevin makes a good point there. It kind of scares me a little bit that people keep buying the dip, and usually the retails investors are the ones that get burnt, and that's when it is the time to buy. But right now, that's not at that point yet. So I don't know. Maybe we wait. Maybe we're waiting too long. Who knows? It's really interesting. I'll keep you up to date. Let me know what you think. Who are you watching? What opinions do you think matter? Who do you think's right? Put some comments in there. We appreciate it, and I'll see you next time.